Hey, how's it going, guys? Welcome back to mentfx. In this episode, we are just going to be taking at a top-down analysis on EU, looking for potential entries to take for our FTMO account, and we're just going to kind of talk through what we're doing, why we're taking them, and how we're looking for them. So this might be a video that's split over the next few days or something, maybe a few hours, if we catch some things and we upload it to YouTube. For a lot of you that don't understand, what we trade and the way we trade at mentfx is primarily Wyckoff, and understanding where Wyckoff is occurring, where we're having markups, where we're having markdowns, and getting involved using some smart money concepts with the help of the idea of inefficiencies and order blocks within the market, which is a concept that has been delivered and taught to us from a number of educational channels, and now is public knowledge, and actually has always been public knowledge. So without further ado, let's get into what's going on this chart. So as you guys know, I primarily trade Euro USD just for the low spreads and for the ability to get in multiple times whenever I want, because on FTMO they have a great small spread on it, and it's very easy to get in on very low time frames if you so choose. So just looking at the weekly and monthly, as you all know, we've been bullish for the longest time ever, especially after we came and tapped into the order blocks down here. And ever since then, we've been making this ascend towards the imbalances within this area and towards the order blocks within this area. On top of that, we've underwent a mini schematic right down here, as you all remember. Followed up to the AR, followed down to the secondary test within that selling climax, followed up to the sign of strength in B, just indicating that prices wanted to go higher, but you know, we're undergoing some more transition of sell orders into buy orders. You have your ST and B right here testing the order blocks within this area, and still just creating more and more areas where smart money could have accumulated many buy positions, and the composite man can then take them significantly higher. After that, we came and followed that down to our spring, and ever since then, we saw the moves up that began to break almost all structural points in this exact markup, looking for tests to potentially happen down the line at the order blocks that were left behind here, the imbalances left behind here, and all that other fun stuff. So we have some of that filled, creating more liquidity on the way up, and then we've just had all of that begin to be filled. And as a result, we came to this last area of supply and demand, whatever you want to call it, or just this last order block that has not been mitigated yet. Actually, it has been mitigated once. So if we actually use the real order block, we can see it mitigated once, and then we take the 50% of that and notice that that one has not been mitigated yet. And that's where price came. And since this mitigation, we've seen bullish price action. Now, similarly, we had another Wyckoff schematic in here. It's a little bit hard to see, so we don't have to worry about it too much. But ever since then, we've had these breaks higher. And already, as we had these multiple structural breaks to the top side, we have been primarily bullish, looking for prices to come and fill the order blocks in these areas short term to potentially see some kind of mitigation and movement away before continuing higher. Overall, to come and target the liquidity points at these highs. So with that, in our expectation, we of course have multiple monthly levels that we can watch for potential entries. However, we don't really look at that. We just understand that we're in an overall bullish scenario on this entire thing, looking for the liquidity just above these highs, and then continuations into imbalances up here formed in the beginning of May of 2014, and the order blocks a little bit higher in April and May, ultimately all up in that area, because that was the last area that took out the liquidity above all of this stuff here. Before we had the real markdown from their distributions that occurred up here. Now, this accumulation occurred, we just had the test of that, and now we're ultimately looking for the, so this was a mini sign of strength. Again, we're looking for another sign of strength right now to happen. After this test, we can expect there's going to be some kind of backup in these areas and continuations to the top side. We're not 100% sure. Again, don't take my opinion as actual financial advice, but this is how I would analyze this market from a standpoint of Wyckoff and what exactly I would expect. So as we get lower, we recognize that the weekly is also very bullish. We can get rid of some of these things and heading to those higher areas. Currently, it's making its way to some potential lower order blocks in here, as it is overall bullish, pushing down potentially into these lower areas. Of course, with this order block being here, more specifically this order block here, more specifically this final order block here, and below that the order blocks that exist within this entire area here. So again, we're looking for this to occur. However, it doesn't have to. They don't have to sell to buy this deep. Instead, they could just sell to buy from here. Overall, we know that there's most likely a reaccumulation in here, Wyckoff wise, so we can see that, and we know that there's an area in here that wants to be potentially tested to see those higher prices be met. We can see that as of recently, the reason we've seen this bearish decline on the daily and even lower was a result of these order blocks that lay right here. Price has been tapping into those, and as we get lower, we'll start to see how those taps in the price have been shown on this markup. So as we can tell, lots of these highs were liquidated over and over again with a beautiful Wyckoff schematic that occurred, and this Wyckoff schematic could now be forming overall into a reaccumulation. However, until we get that, we're not going to concern ourselves too much with that. The fact of the matter is, I like this less as a buying climax because of the way price moved here, and instead like this as a buying climax right here. So we're actually going to label that in this case as this is the ST, this as your up thrust, and this as the UTAD, right? And currently we finally had the breakdowns in price below here. So we're looking at the last order blocks up in these levels, right, in those areas that will act as potential final areas before price wants to come a little bit lower, before then going higher or continuing into deeper retracement. So again, we're just looking for something like this or something like this because we're still overall bullish on this. However, it doesn't mean that we're fully wrong about it. Now, as we're looking at this, we can notice that we have some kind of creek play out here with the liquidation of it. So we might have already completed a reaccumulation after tapping into this daily order block right here. This daily OB was tapped and we have had a breach to the top side. However, these breaches have not been impulsive enough and instead have been more of liquidity grab related. So this might show that we might want to go lower, somewhat short term. We don't know 100% just yet. Just taking a look at this, there's nothing really to concern ourselves with that much on the daily. So let's get a little bit lower to maybe the 8-hour and take a look at what the 8-hour has for us. Now, the 8-hour, as we can see, has undergone a Wyckoff accumulation or reaccumulation in this area. And ever since undergoing that, we have been quite bullish on this, just coming back to some areas in here. So there could be some optimal buy entries there, though where we can see these imbalances laying here. So those might be great areas for us to also consider down the line. But for the most part, I like the order blocks that are sitting within this area here that price is tapping into right now. So this might actually function as a nice play to look for potential buys on the short term. So let's draw out this general order block, recognizing that that can act as a perfect area for us to look to buy from. Let's delete this one since it's not of any concern to us at this exact moment. And we can begin to watch this, right? So we had this impulsive move up, we had this next impulsive move up, and now we're kind of in this area looking for more potential impulses here to come and clear liquidity here and maybe get to this order block up here before seeing, you know, either that rejection that takes us to higher prices or that rejection that takes us way lower and then to higher prices or even below all liquidity points. Because remember, we are constantly looking at a number of things in this market as we anticipate order flow to switch back and forth using the footprints of smart money. So as we make our way down to the 4-hour, we start to actually, we can start to actually make these important areas smaller and start noticing the important imbalances where we're going to expect potential bullishness. So this is a very nice area just based on this little down move before the up move, as you can see, with the liquidity grab below all these lows. And overall, there is what appears to be a Wyckoff schematic, a little snowflake in this area, some kind of selling climax, AR, ST, STB. So a type 2 potentially, we'll have to look at it on a lower time frame. And this move above, relatively strong, sign of strength right here, looking for that test and the continuations higher. So I'm starting to like this a lot as its own bullish scenario. And we're going to look for bullish scenarios on this as price gets into these areas or even right now. So zooming a little bit out, we can see that, you know, the next point that we'd want to target is actually this, as that is the next structural point in this overall move, and we're still expecting prices to come and tap into the areas here. Now, we can also tell that this move right here actually originated and happened as a result of this order block that has been untapped for a while. And it's also, if you want to think about it as an OB 2.0 from this original OB here. So we had that OB, it broke down in price. This is the OB that formed to break down all this price action. So that's where it's tapping into right now. And that's why we're seeing some bearish price action from those areas. Now, again, just because we're looking in here for buys does not mean that price cannot continue lower and end up coming to some imbalances in here. However, I'd like to see price remain above this high, and that's what we're going to basically use as our bias until it changes. So we understand why this tap right here happened. We understand that we had this distribution a long time ago. We understand there's accumulations in here and there's a mini accumulation in here. Now take a better look at that, and to also refine those smaller areas a little bit better, we can get lower on the time frame and notice that we have this area right here that acts as a very nice order block with imbalances that lay from right here to right here. Actually, that got filled a little bit, right? So it created some liquidity there, and we can expect that price does want to come somehow and fill this. So it could do that, or we could potentially even look for sells from these areas here, because as we see price getting broken down, it's leaving behind new order blocks above. So these areas can function as potential sells if price does make its way up there, but I'm not going to concern myself with that right now since we are already in this area here. Now, we'll also highlight this order block right here. This is another final down move before the up move, and similarly to this area right here, you can see that we do have some imbalance that had to be filled, and now we're coming back down towards it. It does appear like it does want to come lower. However, we can't be 100% sure. Let's delete this right here as we don't need it anymore, since we have our two important areas where we want to consider buys from. And you know, if neither of these hold, then we will look for potentially lower prices. However, just taking a quick look at what's going on right here, we can begin to see the schematic that had unfolded. And if we were to just draw this out very quickly, we can see very quickly the schematic that we have in this overall area. And here's your little spring with the order block that formed, or this order block that formed, and this could already be a test, or we're waiting for another test to occur. So again, I'm bullish pretty much from this area here or this area right here. That should be absolutely fine. Now, this move right here, again, was part of that larger sign of strength, and we just want to see this as a backup move, right, which might form another Wyckoff schematic to go higher, or might form another Wyckoff schematic here to then go higher to come and liquidate all these positions here. So that's what we're going to expect. Now, again, as you're watching me do this, you can very much tell that we operate in this market using the fundamentals of how Wyckoff presented his research in the very beginning, with accumulations, distributions, and markups and markdowns throughout the entire market, and how it can go back and forth and do this back and forth, grabbing areas of important liquidity for the composite man to get into new positions. So again, we have this Wyckoff schematic that occurred right here. Now, again, we don't know 100% if it does want to hold or not. We can also see that the AR is the one being tested right now. So as part of Wyckoff's actual way of trading, as the AR gets liquidated, as the accumulation occurs, an AR is usually going to hold. So this is the only time I'll use something that is close to support and resistance. And the only reason is because the AR on its own functions as an area where there was a lot of buying and selling on behalf of the composite man. So there's many orders that need to be mitigated. Now, just looking at that, we can see that we're within that area. There might have been a presented nice buy opportunity in here earlier. However, these are the two areas that we are most interested in. And then as we get a little bit lower, since there's not much we can work with right here, we can take a look at what's actually going on inside this price action. So as we get lower, we can tell that price did have this breakdown, never really retested any areas here, so nothing really to get involved on. We can keep refining this area here, but we don't really need to. Again, you can see that there's a little imbalance here. So again, we could have refined to this order block right here, which is the one that is holding quite perfectly, but the general area that we have is good enough. And again, as we make our way lower, we begin to see the actual final order blocks that were left in these areas. However, I like this general larger area more, so we're just going to keep that open. And generally, again, you can see this AR and how it's being tapped into right now. So there might be a good buy opportunity right here, right now. Let's take a look at what's going on inside here. Now, the 15-minute has not shifted or anything of that sort. It's relatively in a limbo between these 2 points right here. If anything, it's more so in a structural play between these two areas. So if we did see a price hike back up into these areas of imbalance, I may actually look for a potential sell from these areas here to get back down lower into the areas below. Now, to see that happen, I still am more I'm still more happy with seeing buys from this area. And again, even if those buys are short term and still want to go like this, we can still see the fills of the imbalances here, of the order blocks here, and potentially even the imbalances here after we grab the liquidity that rests above these highs right here. As we get lower, we can see that there is distribution that occurred from here. So, you know, those tests from here are not crazy. To get lower into potentially these areas, to get higher is all a possibility. And again, we can't leave anything up to doubt. So this is how you really conduct the top-down analysis and decide where exactly you want to get involved and how you want to get involved. And this is how you do it using Wyckoff. So taking a look at all that, this is good enough for this time frame. I have no real interest in any entries or positions off of this specific area, so we will get a little bit lower. Taking a look at what's going on within this area right here, you can see that we're undergoing some kind of minor schematic, and again, that schematic is testing the inner working or the inner order blocks here that have been already mitigated. So I don't like it that much. So the reality is I'm just going to kind of wait a little bit more, as we haven't had any real shifts. Now, if we get a little bit lower, we can see that the 1 minute did potentially present as an opportunity when it was down here. We came down tapping this large term area, and then from there began to put in higher price action. Now, as we did that, we began to break structure at the top side. And again, you had some potential entries that you could have been able to catch off these. However, there was no real Wyckoff in this area. But as this all happened, we actually created this OB 2.0, so another area of demand where in the future there could be great buying opportunity. So at this point, this lower position doesn't really matter that much, and what really matters is this area in here. So basically, if it was to get below this, I wouldn't be interested in buys anymore. Now we take a look at this and we can see the 50% is the one being respected for the most part, and that 50% is being respected because why? There are tons of orders in here that they have to sell into to buy to get through this liquidity to drop into the previous mitigations within that, within this entire area here, which you can also see is a Wyckoff schematic here. So from there, we can expect those buys would occur. Now, with that expectation, we had this price come all the way back down into these levels. And since then, we've just been trapped in a little bit of a limbo between this point and this point. However, we've put in this bullish price action, breaking highs, potentially leaving behind order blocks in these areas, coming to fill them, grabbing liquidity below last lows, and building a cause to go higher. Now, as we're building this cause to go higher, we're also starting to build liquidity in these areas. So again, there's going to be people that are trying to sell this or maybe looking to sell this. And again, price could just break down, but this is why we use confirmation. Now this area here is going to actually focus, actually just looking at it, it looks like something is already starting to occur. And if I was to see this breakdown in more of a schematic type of format and tap into some order blocks down here, then this would actually function as a really nice entry for me to take it to new highs, for potentially partials at some order blocks in here, understanding that if imbalance filled and this order block got hit, prices could just continue lower and looking to potentially break even at those areas, expecting price to then take off and continue on its overall bullish run that might come to this overall distributions tests in these areas here, or even to come significantly higher as per our higher time frame basis and analysis. So just taking a look at this, just live. Again, we tap, this is the order block that we're tapping into right now. If we get a little bit lower, we'll start to see that there was a beautiful Wyckoff schematic that occurred right here. We can, of course, mark that up just to see it a little bit better. This is more so selling climax, the very first low, even though I don't like it that much as a low. Yeah, so actually this is where I would consider it. This would be the ST, this would be the AR, and then we had this ST and D. So this was actually a type 2 schematic, which, you know, is fine. That happens. This is your type 2 schematic. Then you had prices go higher, and you had this last move into here, which acted as a test. Now that test on its own, again, had its own basic schematic in this area. And from there, we've seen this delivery of price that has, for the most part, come higher than the important structural points in this low, however, has not shifted into this area. So we've come higher, and now we're starting to, again, present some sort of schematic, and we're going to begin labeling this. But again, until the schematic plays out and validates itself, it is not actually confirmed. So this is quite an ugly schematic. It could be a type 2, but until we start to actually see breaks, we're not going to be interested in being a buyer here. Now again, there's areas in here that function as order blocks. We can't really see them right now, but as we get to a higher time frame, those order blocks will become much more apparent to us, such as you guys can notice, this imbalance right here. So you can see that 50%, basically, if we were to draw a little fib tool out here, that 50% is where price tapped into, and now we're seeing the delivery of price a little bit higher. However, we don't know if it really wants to shift. So there might be an opportunity here on a much lower time frame. So price did tap into that area quite perfectly and is now showing us that it wants to go higher, leaving behind generally the order blocks left within this area right here, where, you know, we can potentially expect more tests, and this area right here. And additionally, remember what we spoke about last time with AR, this can function as a very nice opportunity to buy. So if we take a look at this, it's about 3.3 pips. Let's move over to the right here. About 3.3 pips. Gonna get the risk on that set up in a second. There we go. And as price taps into these areas, this is optimal for me, at least for a buy. So we're going to set out a buy right there. And now what we're looking for, so this is actually where we entered, just right there, with our stop loss just below this low, at about 0.5% risk, looking for those higher prices to be delivered above at least these highs and then to completely new highs. So we're just going to sit in on this right now. Let's do that and zoom in right here and wait for whatever this wants to do. Now, this right now, this move down is counting as its own test. Right, these tests can come lower. There are order blocks in these areas that we can look at, and of course, if they do, then we might look at some higher potential entries. But until then, we're just going to kind of hold this the way it is. Now, breaking even itself will come after I see some kind of actual structural shift. So, like, I want to see some real structural plays where I can mitigate to some lows. That might be just above this entry. That way, I can get this position to risk-free relatively quickly. But that's exactly what we're going to wait for right now. So, just taking a look at this, right? It's all based on the fact that we had this accumulation, this move higher, these breaks up, then this accumulation in here that acted as a test of this. And now as it's moving higher, we have accumulations within that area that are tapping into inefficiencies and will act as potential areas we can look for buys to take us to new highs, right? And we're definitely looking for to at least get above this high at the very least and to this high. So these two highs are like basically where I want to aim for this price to get to. And again, it can come down back into these areas, in which case we can look for a little bit of a higher risk entry, just because we'll be taking out some liquidity and dropping into the last possible area, the last order block, the last area of demand where we can expect buys from. So we'll just wait on that for a second. Ugh. So this area here is acting actually as a sign of strength again. And right now we're actually creating a backup. And now this backup could become the real test, right? Which could be lower, or this backup could just back up into some order block in here and then continue higher. If it does do that, then we'll mitigate this risk to this low. However, until that happens, we are just waiting for price action to give us some more. Now, again, prices could just come back down and break down, which is a very big possibility because there is because there are areas down here that can act as new areas where price does want to actually reach before higher prices are met. But because of the price action that we are currently getting inside of this movement here, we are happy with this entry and to take it higher. So we'll just keep waiting for that to play out for us. Ugh. Okay, while this plays out to our next areas of opportunity, I'm actually going to pause this very quickly and then we'll continue as one of our levels or something, or even the loss is met, and then we'll keep going from there. Hello, welcome back, guys. We just breached the first area that we were looking for price to get to, so we are locking in our position just under this low, so we have very little risk left on this, and overall we're just kind of letting it run. As it wants to go higher, as it gets to some higher RRs, we will look at potential lock-ins or potential break-evens. However, we are just under break-even right now, so I'm just setting that up as we go. As you can see, we're coming to those highs, just breaching them a little bit. As this high gets breached, I will actually take off 50% of my position because I like to secure partials early and I don't really care about holding super long. But as this is breached, I will be taking off 50% of the position and then moving to break even. So we'll have profit secure on this no matter what. And at this point right here, we will then expect for prices to keep on being delivered higher. And at that point, we are going to hold for the higher areas of liquidity. And we're also going to be mitigating properly as per structure. But we also are going to be mitigating that structure using the higher timeframes, because we understand that lower timeframes, as per our last video, can shift a lot within the movement of price, as you remember, and this could all still be part of multiple bullish moves to the top side. So we're going to wait for this to be met and close about 50% of our positions on that. So we're just waiting for that right now. And again, I'm going to be executing this manually just because it doesn't really matter for me. There we go. So we've executed a manual close right there, and that's fantastic. And now we're letting the rest run at break even. So we'll actually put that in. There was a partial taken right there. And again, that partial does not basically mean that I made a shit ton of money, right? That partial on its own was just now a secure of about 0.6%, right? So that's just 1.2 over 2. So overall, we've locked in plus 0.6%, right? So again, this is how you can use smart money to enter trades the way you want to. Now, again, this trade could have ran a lot more. Well, it might still run a lot more, and I could have made a lot more percentage on it. However, because of the way I trade, I like to exit relatively early, secure positions, leave myself at break even, and then if the trade does want to run, I let it run, and I move my stops, you know, relatively aggressively. So we have our plus 0.6% locked in. And again, if price does come back lower after running a little bit higher into like these areas, again, I will look for potential setups to take myself higher. And that's how I look for Wyckoff back and forth. But until then, I'm just going to be happy with the lock-in and understand that overall we've already made money on this trade, and now we can expect for potentially higher prices to be met. Now, as we move out and view where we actually are in regards to the market, we also recognize that, you know, there are places where this market might just want to break down. But overall, the play is to get at least up into these areas up here, right, which will already be a 1 to 15. And then, of course, as we spoke to, potentially the order block up there on the significantly higher, which is 1 to 31. And that will all be part of mitigating or moving my stop aggressively, but also looking for potential re-entries along the way. That is perfectly valid and a perfectly valid way to get in. So let's get back down a little bit lower, taking a look at what is going on here. As you guys can see, we're just kind of playing around this area with our lock-in. Again, I'm just moving my stop loss to break even right now, and we're securing that at break even to make sure that if prices do come back down, this is fully secured. So we have absolutely no risk running on this with 0.6% secured, guarantee. And stop loss is at BE officially. We're just not going to move our actual stop loss since I want to keep the stop loss here. So again, that was a 3 pip stop loss that we entered on, and now we're just letting it run. And again, because it's Euro USD and it's a major and it's through the FTMO platform, the spread on it is 0, and you know, we were able to take profits relatively quickly, and there's no huge commission cost, which is also great. So I'm going to pause this while this does its thing, and we'll return once we have an update on how this wants to keep playing out. Now, again, I might consider partials at these areas, depending on how price moves to them, and then look for potential re-entries on the way up, which is perfectly valid. Otherwise, if we partial and then it continues even higher, then it's going to be unfortunate for us. But again, we're going to have opinions to partial at higher areas and look for re-entries on the way up again. So now we're just going to wait for this to do whatever it wants, and I'll be back as soon as something new and interesting happens. Either we hit that break even or we do get those higher prices. So price is coming back down to this area right here. As you can see, this order block that was just left behind. So actually, while we're doing this, we can actually look for potential re-entries at this order block right here, because this order block might function as a place where prices may want to give us another Wyckoff schematic. So we're going to delete the order blocks down here because they are no longer interesting to us and no longer important. None of these areas are any longer important to us, and basically our bias becomes invalid and changes if prices are to get back down below these areas here. So what we'll do is we'll collapse this position a little bit so we can see it, just like that. There we go. So we don't have to have that in the way. Stop loss is at BE as we have spoken about. There we go. Let's delete this. Let's go back inside of what's going on here and recognize that we are now tapping into this order block here. So as we're tapping into that, there's not much, but you know, I'm still looking for some kind of structural confirmation or some kind of Wyckoff setup to get myself into more buys higher, and again to partial along the way, and to potentially look for more entries along the way, because I like to get out fast and I like to get back in, because that's the way that I like to trade. There's a lot of people that trade smart money very differently, which is perfectly fine. I know ICT trades only during certain times, so he's on a completely different way of trading than me. I know Vertex, good friends of mine, trade a very, very specific way too, where they wait for structure and they actually hold their positions, which is absolutely insane to me, but congrats to them. right? So now we're seeing these breaks higher. Now at this point, it would be fine to move your stop loss up here, but I'm still going to leave it at these points right here, just because I recognize that price could then break down here and then go higher. Unless we get a breakdown and then a move higher from a newly created low, I will not mitigate to this position here, and instead I'll just keep waiting for now. But we are looking like we want to go higher right now. So again, if prices did come deeper into this retracement and give us some more price action, and then maybe even structural place to the top side, I'd be looking to get involved again to go higher. But because we didn't get that, I'm not going to be doing anything. So I'm going to pause again and be back with you guys when we have something new, something interesting, and we'll look at that again. Hey, how's it going, guys? So I took a little break, so I'm back right now, and as you can see, we had a new high indeed put in place after this high was put in place, and we were actually correct about that liquidity grab, and since then we made a new high. We're able to lock in our take profit to this level here, guaranteeing us 0.7% on the position overall. So again, the RR wasn't specifically positive, and then on the rollover between FTMO, we actually did not get stopped out on this, so the position is still running in positive. However, based on what we had occur, we were stopped at 0.7% gain on this mini trade on the 15-second, basically made within, we look at this entry to the time we were stopped, in about 15 minutes. Now again, the same thing plays. We had this move down, this move up, and this acts as an order block again, where we can look for potential re-entries if price is to come lower and give us the same thing in the form of Wyckoff and continuations. So again, this is how I look at a market every single day, and this is how I look to get involved on plays. It doesn't mean that my RR is always going to be more than one. It usually is, and it oftentimes is, because of the way that we get involved and wait for prices to deliver higher. However, in this specific case, and because of the weird way price moved, because I guess it is 5 p.m. New York time, so I should have probably noticed that before I started this video. But again, the session times don't really matter, and I don't really dedicate myself to trading during any specific session, because as long as the spread is low, I really don't care about getting involved or not getting involved. So even though my FTMO account is still running on this trade, because this gap happened during the 5 minutes that FTMO does not deliver price, we are running positively on this currently with our lock-in just below these lows right here. And we're going to let that run. However, overall, even if you weren't able to let that run, that's a guaranteed 0.7% within 15 minutes off a mini setup that we basically did top down for you guys, and you saw us execute live. So thank you so much for watching, guys. I hope this explains to you how I pretty much go about analyzing a market and then using Wyckoff itself to get involved on trades, basically intraday on one currency, because as you all know, I like to just stick to one pair because I understand how I want to get involved, when I want to get involved, and how to do it consistently. Thank you so much, guys, and I'll see you guys in the next video.